Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are going to be talking about a new company which is very soon going to get listed on the bourses. It's a well-known brand in the Indian consumer market, a consumer brand, and I would say it's a portfolio of multiple consumer brands. It's also a company which has made, or I would say, that has progressed by leaps and bounds in a very short period of time, has also created a lot of wealth for its venture investors, and now actually going to create history in a very short period of time by going to get listed on the main board by bringing out an IPO. Let me now actually welcome the management of the company, Mr. Varun Alap, the chairman and chief executive officer of Honasa Consumer Limited. Varunji, welcome to the show.
Thank you. Thanks for having me.
Um, I think it has been a very short period of time. And when I say short period of time, it's not about aspirational growth, but it is more about relatively how much time the others actually have really taken to create wealth in a consumption market like India. But you have done it in a very short period of time. So I think the first question we always like to ask for our viewers is that how it has been the journey and how you have really managed to sort of create this very strong growth trajectory.
Um, Thank you. Thank you for asking that question. I think it'll be important to sort of go back to the starting point to get to where we are today. And it's a brand and company which was started by us for our own personal journey. And it's a company which is started by me and Ghazal, my wife and my co-founder. And in 2014, we were blessed with a baby boy, Agastya, and that's when our relationship with personal care became serious, right? Because now we had to choose products for our son, right? And when it came to it, we always wanted everything to be safe and kosher for his usage, and that's when we started researching, all the products out there and what's the best for babies. And Ghazal had spent some time in US before that, and we came across the fact that there were a lot of harmful chemicals which were out there in other baby care products. There was some sort of negative news and cases, etc., which were also ongoing on other brands, and that just scared us as parents. And we wanted to use something which was stress-free, certified safe on our child, right? And we couldn't find that in India. And in 2016, after going through a lot of cribs and cries, right, we decided that this is something which is worth solving for, and we quit our jobs, and the two of us just started this company with a small provident fund of 20 lakhs that we had, and in 2016 December is when Mama Earth was launched as Asia's first made safe certified brand, right? Which is completely free of harmful toxins. Right? We started with baby care as a category. Right? I think two or three things happened in our first year of existence itself. Right? One, I think we realized that while a lot of brands were serving India, and not a lot of brands were crafting for India, and they were not understanding that we have thousands of years of cultural heritage, right? And we have beliefs in what we call our dadima, nanima ke nuskhe, right? And we genuinely do believe in them. Nobody was looking at that and crafting products which will solve our beliefs. And for us, that insight came through the small product called Easy Tummy Roll On, right? Which was basically a concoction of coconut oil, hing, and fennel, right? Which you use on your babies for digestion. Right? And we realized that that's what we trust, right? More than gripe water, more than medication, right? Because babies are on mama's feed, right? During those times. And when we developed a product which was a ready to use concoction that you could use on the tummies, and parents just blessed us, right? They were so happy that a brand was listening and was crafting products for them. And that was genesis of our insight that we need to craft keeping Indians in mind and our cultural nuances in mind, and that has led to innovations like onion or uptan, or multani mitti, and or a curd conditioner, and which is something very Indian in nature, and that's something which consumers have loved, right? And which is why Mamaearth has been able to become the fastest to 1,000 crore brand in the history of FMCG, and because we innovated right. And I think the second thing that worked for us was the fact that we went digital and e-commerce first. And I think that allowed us to become a far more innovative company, and because the amount of complexity that you can manage very easily in the e-commerce ecosystem, and, is far higher than what you can manage in a traditional distribution system. And in a traditional distribution system, if you had to launch a product, you will first need to send it to 1,000 distribution points, and then from those 1,000 distribution points, you will need to send into lakhs of stores, and hence the risk of a product going wrong just increases too much. And in the initial batch sizes and everything, etc., the risk is very high. The marketing that you need to do then to get those product out of those stores is also very high, because of which a lot of innovations die the death of your business model, and while the consumers might need it. And we realized the e-commerce and digital platforms were amazing for innovation, because from one a supply chain center, you could actually service 25,000 pin codes in India. And you could take small batches, right? And you could only target consumers who were looking for a certain kind of product, and get their first feedback, right, on the product. And if it is working well, then you can double down on distribution. And that just allows you to become a far more innovative company, which is fulfilling consumer demand. And again, something which consumers love. And when you're able to provide products that they're looking for, right, which others are not listening to, and they do consider those brands to be things which they cherish more and build deeper relationship, are willing to pay premium for. Right? So I think combination of some of these things helped us scale Mamaearth far faster than what any other brand has scaled in the past. And our marketing channels again are things which are far more tuned to the Gen Z and millennials. And the fact that we are doing this conversation digitally, and is something that we understood really well even in 16, 17, right? That the media consumption habits are changing. Right? What was Saas Bhi Kabhi Bahu Thi in the past is becoming a vlog now. Right? What
Mm.
was a news show in the past is becoming a podcast now. And that's how people are consuming content. And it's okay. And we need to go with the consumers and their viewing habits rather than trying to sort of change them. And that's how we aligned our marketing capabilities. We built studios where we convert where we churn out 2,000 pieces of content every month, and all of that was able to present us to consumers in a far more relevant manners, right? We do over 14 language contents on any product, and that just allows us to connect with not only India but also Bharat, right? Because what we realized was that as an online first brand, right, your ability to serve tier 2 and beyond, and even very early in your journey, is very high, because distribution is not geographically limited, and hence if you do the right kind of content, right, consumers from all over India would buy that brand, and which is what we see. More than 45% of our revenues actually come from tier 2 and beyond already. And so I
Okay.
think some of those combinations, right, use of technology, right kind of product innovation, building brands which matter. In fact, on that front, we build purposeful brands, right, which are why-based brands. So Mamaearth has a program called Plant Goodness, right, where whenever you order on our website, we actually send you an email where we plant a tree and connect it back to your order. And we send you an email with a picture of the tree, the geolocation of the tree, which makes you feel that you're not doing good just for yourself by ordering a great product, but also for the environment. And that makes the relationship deep. Right? If you come to our app, as a consumer, you have a segment called Our Forest, and where you can actually see all the trees that have been planted and connected back to your orders in the past. And consumers actually share that on their social, saying, hey, now I have 5 trees which are connected to me. Right. So I think all of that really helps consumers. And once we built Mamaearth into the sizable brand, I think we not only built a brand, but an organization, right, which had brand building capabilities. And we started seeing the longer term play for this organization, where we realized that the consumer actually wants different kind of propositions in the market. Right? And of course, Mamaearth is providing the natural proposition, but then there are consumers who want a dermatologist proposition or a Ayurvedic proposition or a hydration proposition. And if we wanted to capture the larger share of this market, and we need to have the strength to build brands and serve consumers with different propositions.
But
And
all
that's
these
where,
brands were built organically, or you also acquired?
yeah, I think that's the journey which started for us in 2020. Right? We launched our second brand, the Derma Company, right? Which is something that we crafted organically, right? Which is a brand which is designed by dermatologists to serve skincare needs. And that brand in 3.5 years has become a 350 crore run rate brand already. And again, it's actually reached some of these milestones even faster than Mamaearth, and telling us that the capability that we have, and the playbooks that we have built are actually replicable. And we actually then launched another brand called Aqualogica, which in under 2 years has become a 150 crore run rate brand. Right? And again, growing very
What
fast.
what that brand serves?
So Aqualogica stands for hydration, right? Aqualogica basically stands for the fact that Indian tropical weather, right, does not need heavy oily creams. Right? We got those heavy oily creams because of the colonial rule. I mean, Britishers chale gaye, creams chhod gaye, right? Kind of a thing, right? And because of that, we just stuck on to heavy creams, right? But our weather actually is more tropical in nature, and we need gel-based light moisturization and more
True.
hydration for our skin.
Hmm.
And that's what Aqualogica serves, right? It builds products which are far more light and hydrating in nature, right? And consumers are loving it for that. And so again, another brand where we saw
That
success.
is that is already a 150 crore brand.
Yes, that is a 150 crore run rate brand now, and basis the quarter one FY24 data. And based on that, we also got confidence, right, that if we could do this organically on our mixes, right, we could potentially also look at some younger mixes outside, which could be add-on to our portfolio, which we can grow very fast, right? So, which is where, like you rightly said, we also started looking at inorganic way of growing, and we acquired two brands, Be Blunt from Godrej, and a brand called Dr. Sheth, which was from a Bombay-based family of dermatologists, right, who had actually perfected certain formulations. And again, both of these brands have done exceptionally well. They are just about 1.5 years old in terms of acquisitions, right? But a Dr. Sheth in 15 months has grown 20 times since we acquired it. Right? B Blunt again has grown very strongly by 150% in the last 1 year. So I think clearly showcasing that our playbooks, when we apply to an inorganic brand mix also, when we're able to grow that strongly. And with all of these brands, we are trying to become the most loved company in the beauty and personal care segment for India, right? Which we believe is an amazing, fast-growing, high gross margin segment, and that we are betting on from a longer term perspective,
And
which
and
will
coming to
definitely show.
margins now. Um,
Sure, sir.
I- Before I actually go to margins, let me ask this question. Be blunt. I know the Godrej tried for a long time to really make it super successful, but obviously we know what happened. You've acquired Be Blunt. Now the question is, how you synergize Be Blunt with your existing natural portfolio? I think that's the very interesting question, which I think we should be asking.
Yeah, in fact, it is for us. All brands need to live and breathe their own, their own DNA, right? Now, Be Blunt has a DNA of salon-like hair at home, and which is why we actually also acquired the salon business, because that business is finally what gives equity to the products business. And you want the luxury salon-like experience that you expect from Be Blunt salons through the products that you use yourself at home. And there, what we, of course, as organization, we have designed ourselves in a manner where each of the brands has a brand lead, and who lives, breathes that brand, and makes sure that the focus and innovation and marketing required on that brand is being provided in the right manner. And so I think it took us some time to get the right structure and integration going. But now we clearly have a way of ensuring that the brands get the right organizational focus to grow.
Okay. Now let's talk about the margins. We actually have seen that revenue has grown nicely, but even if I look at the revenue from the perspective of last year, we're talking about almost 1,000 crore plus revenue. But there is, and the gross margins are very healthy, very strong gross margins. When we come to EBITDA margins, there is a huge difference. So help us understand what actually transpires between gross margin and EBITDA margin.
Sure, sure. I would actually firstly share some numbers to set a good context of how some of
Sure.
these trajectories are. And so FY22, we had a revenue of about 960 crores, and like you rightly said, close to 1,000 crores. And FY23, we have grown to about 1,500 crores in revenue, and it's close to a 58% growth. And yes, the net EBITDA for the FY23 was 1.5%, adjusted EBITDA was 3.2%. And then in Q1 of 24, we have delivered close to 500 crores in top line, which is 48% growth, and at a net EBITDA of 6%. And so that's the trajectory which the revenue and EBITDA have followed. And now coming to your second question, which is basically what transpires between gross margins. So for all of these 3 years, our gross margins are in the range of about 70%. And so we have fairly healthy gross margins. And and that's the beauty of BPC as a segment, this is a high gross margin segment. And that said, we are investing for growth. And the kind of growth that we have seen compared to the industry is far better, far stronger. And in our business, and brand building is the most important way of delivering growth. Right? Only if people are aware of your brands, right? Only if they know what you sell, what products you sell, why are they superior than others, right? Is why they will buy the brands, right? Because otherwise, there are a lot of brands already out there, right? So if you, and that too at a certain premium to other brands, right? Because these are more premium propositions, right? So I think the first place where we have been investing is in brand building, and which is also evident in our spend ratios, right? So if you talk about from that 70% gross margin, right, the biggest cost item is actually advertising and promotion, right? Which is where we are building these brands, right? And in fact, not only building one brand, right? The core brand has actually become large and it has become far more efficient. But during that same 2 year period, and we have built five more brands, right? And when the brand is young and it has lower revenue, but the cost of marketing, there is a certain level of minimal optimal cost of marketing that is required to get the basic awareness going, right?
What
So
has been the average advertising expense for you as a percentage of revenue?
So from a, it used to be 40%, and it has come down to about 35% now. And like I said, that's also sum of parts. Right? In that sum of parts, if you look at Q1, and the other brands outside of Mamaearth are still at 46%. Right? So Mamaearth is better, right,
Then
relatively.
I'm sure in Q1 I think the advertising expense would have been slightly lower compared to last year.
Yes, yes, you're correct. Right.
Yes.
So that's a trajectory which, if you can see, be it FY22 to FY23, FY23 to FY24, we are seeing leverage kicking in because after a certain point, and this investment becomes more like a value investment, and as a percentage, it starts to go down, right? A
Hmm.
percentage to revenue. And so that's what we are seeing happening. Right? And if you so that's the largest chunk of cost, which is where we are seeing the maximum leverage as well as we grow as a business, and as the brands grow. And the second chunk of cost is actually something called channel costs, right? Which is where a lot of our online channel costs sort of come in, be it the Amazon fulfillment cost or our D2C fulfillment cost, right? Etc. Sort of flow through. Right? This is the second chunk of cost. This is about 11 to 12%. Right? And the third cost is salary and OPEX and rents, etc., and which is to the tune of about 14 to 15 odd percent. And so those three are the large costs which are there. And we are seeing leverage on marketing, and we are seeing as we scale, because our offline contribution is increasing, and the percentage of the channel spends, especially for a brand like Mamaearth, right, are continuing to go down. And we are also seeing that the overall revenue increasing, the OPEX leverage is sort of kicking in because last couple of years we've also invested in building the right leadership team, and as well as invested in building the right offline team, because that's a
And
people-oriented business.
also, if the revenue keeps increasing, then actual advertisement expense overall, I think, as a proportion, I think will come down. That is going to be a big trigger. Perhaps I think everybody is
Yes,
going to actually focus on that because your revenue scale up, automatically that big delta will come. But
yes, sir.
also asking you one question, like how much amount of funds you're raising in this IPO, and what is the amount of funds which you're raising for the company, and where that fund perhaps we should be expecting to be get used.
Sure. So the IPO is a combination of primary and secondary. And overall, as a company, ours is a fairly capital efficient model. And we don't have any major capex requirements, right? In fact, we have a negative working capital as we stand today. And so into the company, there is very limited infusion that is required. And so out of the 1,700 crore IPO, and we're raising about 300 and 60 odd crores, right, for primary infusion into the company, and the purpose of that would be to again continuing to drive strong growth for the company, and by investing in one, brand building like we talked about, and secondly investing in opening of our exclusive brand stores, and we have opened about 85 of them. We intend to open 150 to 200 more stores, and thirdly also expanding some of the salon footprint. And fourth, of course, of this 365 crores is the general corporate expense, which is possibility of more acquisitions in future, and is where we could potentially use that. And so I think the 367 crores that we are raising
Sure,
into the companies for that, right? And the balance is OFS, where some of our early investors who had invested in the company in
we get an exit.
2017, yes, are taking a part exit, right? They are also, if someone has 10%, right, they're only selling 2.5 to 3%, and majority of their ownership will still lie in the company.
Makes sense. Like it always happens. Just one quick question. 85 stores, as you just highlighted, you already have it. What's the sort of average turnover per store per annum for now?
So these stores are actually, so if you look at our physical business, right, the largest chunk of our physical business comes from general trade, right,
Mhm.
which is where we are present now in about 150,000 stores. And the second largest chunks come from modern trade, which is places like DMart, Reliance, right, which is where we are present in about 30 different modern trade customers. And the third chunk comes from our exclusive brand outlets, right, which is Mamaearth stores. And what we realized was that in the general trade and modern trade environment, and you can only place 12 to 20 of your hero SKUs, right, which has the best throughput there. And, but a lot of our consumers were looking for our full assortment, and they wanted to experience the whole brand in a physical space, try it, smell it, right, be look at all the categories that we have, right? And we felt that an exclusive brand store would be able to provide that space for them to buy it in the physical world, right? Which is where we started expanding. It's about a year old as a channel, right? Each store on an average does about 5 lakh plus in terms of revenue
Per year,
per month.
per month. Okay, 16 lakhs per year. So
Ji.
85 stores. Basically, we're largely talking about a 50 crore revenue.
Uh, yeah.
Fair enough. And you are looking to open about 300 stores. Did I hear the number right?
Yeah, I mean, we have sort of, provision for about 160 to 200 over the next 3 years, right?
Okay.
And then depends,
Okay.
because it's a good capital efficient model, right? So we will look at how we need to further expedite or expand that.
Okay, sure. So clearly, I think while those stores they will keep on helping your brand building, but I think overall, I think still a broader distribution-led strategy is where actually everybody would be looking forward. I think
Yes, sir.
more revenue, lower perhaps cost, higher operating leverage is what I think everybody is going to watch out for. So perhaps I think we come to the end of this conversation. It looks like a great story, a great Indian consumption story. Great, already a very strong revenue growth journey, and I think a great consumption brand which is going to get listed. So I think all of that really marks a great story. We'll look forward to, and all the best wishes from our side to you for this IPO.
Thank you so much, sir. If I have to add one line, it's
Sure.
also story of the new India, and where a middle class couple can quit their job, start a company, and in less than 7 years, and see such an
Absolutely.
outcome. I
Dream
think
come true.
that's also a story where thousands of other Indians could potentially do this.
Absolutely, I agree with you. I think that absolutely it is inspirational. And I think a lot of Indians actually are going to look forward to. But with all those best wishes, I think we thank you for coming on our show and giving us all the insights. And we'll definitely stay in touch with you for your next results and also from next interactions. For now,
Thank you
dear
so much.
viewers, hope you enjoyed this conversation. We actually do a wrap for now.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.